Here's a simple candlestick pattern that I use. Now, of course, there's millions of candlestick formations and classic patterns out there. This is just something that I use. It's so simple. It's not even a classic, in that regard, candlestick pattern. It is one. I guess it is one. But it's context, which is always important. So I'm just going to lay the foundations for this first of all. So what you need is a consolidation in price first of all. It doesn't matter what the time frame is, you just need some form of sideways sort of ranging market. It's as simple as that. And then as far as the candlestick is concerned, is that the start of the bar has to come from within the range. So here's our overall range here. Okay, doesn't matter if it's a bit sloppy or whatever, it's an overall sideways range. So the start of the bar has to come from within the range, and then we expand. It's what I call an expansion bar. That's it. We expand out of the range on a closing basis. So we close outside of that range. Clearly closing outside of the range, that, which is also, of course, more often than not, some form of what? Engulfing bar, but it's the context. So sideways range, expansion bar, bandle outside of that range, and that's it. And then you buy basically at the close or the following day. If you want to then look for a little dip, you can do whatever you want on that. But essentially, that's the stop loss can be below the low of the expansion bar itself, and then you target whatever you want to target up there in relation to your own personal analysis of any given market. So let's actually now look at that actually on a chart. I've got a chart here of gold because this was something we were looking at in my trading room not that long ago. And there we are. It was back in September last year. It was a classic expansion out of a range. So this is just on a daily chart. There's a bit of a range there, and then it started from within the range. Then we had a lovely expansion out of that range, suggesting that should be the beginning of a new move. It's as simple as that. So that's as an example. If you're want to go back and have a look at that, that's back in September of 2024 there as an easy example. I'll come up with something now because there's a bit of a choppy range going on here at the moment with the Aussie dollar. Okay, so the Aussie dollar is in a bit of a choppy range. So again, we can pretty much bracket that range off down here. And at some point, doesn't matter what it does at the moment, what we're looking for is an expansion bar at some point that does something like that. Now, it may not happen, but you keep an eye on it just in case it does. And that is your classic expansion bar closing on the outside of a sideways range. It works. I use it in my trading, and people can use it or not use it for all they like, but that is what I use. Have a lovely weekend. By all means, add some comments if you want to, but it's just a simple concept. Put it in to the right context of the market. You don't just trade every single one of them. What's your overall analysis of a given market first of all? What's your market context? And then if it happens, like in that gold example, then you can trade it on the back of that. Hope that helps. I'll see you soon.